Okay, let's talk about this disastrous Vela airdrop, about this red pill, blue pill challenge. See if you should even take part in this challenge, or does it not make any sense at all. All right, first of all, guys, what is the blue red pill? If you haven't heard, it was this choice that they have confronted with us at the time of the airdrop. It was either take the blue pill and get guaranteed allocation of 38.28 esVELA, or not both, or 19.14 Vela. Or take the red pill and claim up to 8 times the airdrop based on your official trading volume. Now, at the time, I was away on holidays, so I was looking at this going, what? 19 Vela? At the time, that's like maybe about $40, about $2 per Vela. And I was like, that's like a pathetic airdrop. So does it even bother if I get 8 times? Maybe I'll just do that, anyway. So I forgot about it until I got home. So now we're just about a week away from the end of the challenge. So I was like, okay, let's have a look at this and see if it's worth me trying to get up to 8 times my airdrop value or not. So I went ahead, did a few trades to see what the fees were, whether it makes any sense at all to try and do this. And I've come to the conclusion that this whole entire thing is a scam. It's ridiculous. You shouldn't engage with this. Makes absolutely no sense, especially at the price of Vela. It is right now around 130 currently. It was around 120, even 110 not too long ago. So I'm going to give you like the really simple explanation up front, and then if you want the details, I'm going to show you all the details later. So first of all, let's talk about just the most plain numbers there are. Here we can see the fees for trading crypto are 0.08%. So if you want to do 600k volume, you would be paying $480 in fees, plus you'll be paying blockchain fees, which work out at around $1 in ETH. So if ETH goes up, it's going to cost you more per trade. So that makes zero sense, because even if I do all of these things, at the end of the day, how much Vela am I going to get? So 8 times 20, it's 160 Vela. So that's worth about $160. So for me to pay $480 to get 160 Vela makes 0 sense whatsoever. So, and even if I get them in esVELA, it still probably doesn't make much sense at all, because I would have to vest those Vela for 6 months in order to get Vela out. So really, it just makes 0 sense whatsoever. Now, if I want to go and trade the Forex, and that's before I make any losses on the trading or obviously profits, but I mean, if you're going to have to do 600k volume in a week, you're going to be pushed for time, so you're going to take some unnecessary risks for sure. If I go and do Forex, the fees are lower, so they're only 0.015%, but because they count only for a third of volume, it means that effectively your fees are 0.045%, so slightly more than half. So again, multiplied by 600k, that works out at $270 worth of just the fees before any trading losses, plus blockchain fee. So let's say you do 10 trades, that's another $10. You do 20 trades, that's another $20. So think about it, 600k. And in terms of Forex, that's 3 times that amount. So, figure out how much collateral you have, what kind of leverage you're going to use. And if you have $1,000 in collateral and you do 100 leverage, that's $100,000. You're going to have to do 6 trades. Okay. No, sorry, not 6 trades. You're going to have to 1.8 million. So what's that? 18 trades. And if you cut that, that's 18 trades. Yeah, so I mean, guys, you do the numbers, right? It doesn't make any sense. Anyway, so this was the basic airdrop. And after 12.7k of volume, my airdrop was only 35 esVELA and 16 Vela. So I'm actually getting less of an airdrop right now, even if I already did 12.7k volume. All crypto in trading. And then I did 25k and I only got 38 Vela. So it's only at the same amount of esVELA after 25k of a volume. Or esVELA or 17 Vela. So I'm not even at the basic airdrop yet, even though I've done 25k of volume. Now, this refers to my trade example where I'm going to show you a real big problem with Vela exchange right now, because even though you set limit orders, it doesn't actually fulfill them at those limit prices. It fulfills them near enough, but because you use large volume and you use because you obviously you're using quite high volume, it's not able to fulfill your trades at those exact amounts. And because I assume it's on chain, they want to put it through, I don't know how it works in the background, but anyway, it doesn't fulfill at the limit price. So you actually make less money than you think you do if you're going to be doing scalping. This becomes really important. I'm going to show you that in an example in the next example. So this is the gist. If you guys just want to know the gist, this is the end of the video for you guys. You can see it makes no sense. You can just buy those tokens, invest them, and then make more tokens over time or whatever, or you can just trade them. Now the price right now is really low, so you might as well, I mean, you could just buy them. They're down about 90% anyway from the peak, maybe 87 or 80 whatever percent. So currently you're better off just buying these tokens and, you know, maybe keep them for the long term, stake them, get some extra tokens, whatever. But in terms of trying to work for the airdrop, it makes no sense because just the fees are going to be more than buying the actual tokens. And then on top of that, you're likely going to make a loss. You're going to be trying to create that kind of volume within a week because, you know, you're going to be pushing yourself. Depends on how much collateral you have, how much leverage you use as well, how much you can actually trade without getting liquidated as well, depending on the volatility over the weekends is really low. So I've had a reasonable success with my trade, but I still made a loss on it, and I'm going to show you guys now how that happened to me. But yeah, anyway, that's the gist. Let's go into a little bit more details behind what's going on when you actually do perform trades, because this is really important. So first of all, before we move ahead, I just want to show you guys the explanation that the team gave. So they said there has been a lot of dialogue across our communities about the distribution amount, qualification standards for the airdrop, and we wanted to share both our perspective and a bit more detail about the decisions adjustments recently made. So the red versus blue pill choice was created to reward traders that participate in official launch. Now this is quite important. There's going to be another airdrop, and this is going to be based on your trading volume during the current period. So that's another 6 days or so left. So this may be something important. I'm going to talk about this at the end. So if you guys wait till the end, I'm going to explain why you could take advantage of this particular situation, which most people have already forgotten about. So this could be something you guys could try. But let's continue. So choosing the red pill path gives users an opportunity to earn up to 8 times their minimum airdrop value. Over 24k wallets qualified for the airdrop. So think about 24k wallets qualified for the airdrop. This is going to be important again later on. And we expanded the airdrop to include lower volumes so that everyone had a fair chance. That's great because we all were, building up volume for no good reason. And obviously we were paying fees as well doing that. And you could have made losses as well if you were doing that. So thankfully, most of my trades were in profit, but not a lot of profit. But anyway, however, the trade-off was a lower base airdrop amount per wallet. That's the worst thing you can do in an airdrop. Give like a meaningless, pointless airdrop, because that's going to alienate the entire community that you're working so hard to build. So that was not a good trade-off for these guys. They should not have done that. They should have done tiers. Give the small guys small airdrops, big guys bigger airdrops, but it doesn't have to be like 100 times bigger for the whales, obviously. But anyway, we believe this was the right choice in order to balance circulating supply and rewards for not only whales but smaller traders. This initially might make sense, but when you dilute it that much, it makes no sense whatsoever, So between communicating with the wider community and key partners, a few decisions were made. 1. Volume made under a minute has been counted for the airdrop, even though I don't think we're able to open and close the trade in less than a minute. But anyway, as ultimately the trading activity still tested key functions within the beta application, which was really beta. Like there were a lot of problems with them, but anyway. So 35k ARB was distributed between top 250 traders. So you're saying you don't want to reward the whales, but then you give the top 250 traders 25k ARB. Wow, amazing, thank you. Anyway, on top of potential 8x airdrop for the red pill members. But I just told you that makes no sense based on the value of the cost of Vela right now, or even at the time, and also the amount of fees that you're going to have to pay to create that 600k volume on crypto, and then 3 times that on Forex. We'll continue to review discussions around incentives, and we'll work to improve any processes going forward. Thank you everyone for all the feedback and the dialogue. So X is red, blue pill, blah, 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 blah. So that's their justification, which in my opinion makes no sense at all. Why just alienate your entire community by giving them peanuts, which was the universal reception of the airdrop anyway, as we know if you look around the internet now. But anyway, let me show you the problem if you want to try and build up volume right now and you're trying to scalp the trade. So I was using Arbitrum because Arbitrum is a really kind of stable token. It was bouncing nicely between 2 levels, and I said, right, I'm just going to play these levels. And it made sense initially. So I said, I'm going to enter here and then exit around here, 17. And that should give me, that was a pretty high probability. Also would bounce probably here. So, you know, I wouldn't get stopped out and I would just make about $12 according to this. And that would be enough to cover my $10 fee, because my point is not to try and make money. My point is trying to make volume and not lose money at the same time. So just to cover my fee, that's all I wanted to do. So I put in the limit price. So you see, this is the limit order. So I put in my collateral. I jacked it up 99x. It doesn't work if you do 100x for that reason. So another bug in the system. Sorry. So I put in limit order. This is important. Look at these numbers. So 1.17515. So you can see here the price was 1.17515. So this is the exact limit I put in because I wanted to go in straight away. I didn't want the price to move away from me and then my limit order not getting filled. And then I put the target profit at 1.177, which is up here, 1.177. All right. So I figured that was likely enough to work and happen quickly. And because based on previous price action, and I figured I'm going to make $12. So that's fine. Right. So going forward, this is, you can see this is when I confirmed the order. So again, like it only shows 2 decimals points. So that's a big problem because it looks like I'm putting the same entry and exit price, but obviously I'm not doing that. And then showing me the fee here at $5. So that's fine. $5 in, $5 out. That's $10. I make $12, $2 profit. And I get to increase my volume by 10,000 because that was, well, 12,000 because that was 6,000 in a position size. Okay, going forward, I opened the position, but here comes the first problem. So my position opened at see here, average entry price, 1.17566. So it opened 1.7566. So it actually opened above here, even though the price was down here, and actually continued to go down. Sorry, the price was here and it opened my position 1.7566, 1.756. That's above this, sorry, that's above this line here, even though the price was showing to be down here. So it didn't open where it was supposed to, okay? It opened higher, so it put me in a worse position. I was immediately in a loss here. So then thankfully the price went up. So my losses were, but this loss contains both P&L loss, so just your position, and then the fees as well. So showing the fees here. So that's my entire P&L, so to speak. So the price moved in my direction. And just to show you what the amount of Vela was. So at the time I opened the trade, I had 35 esVELA and 16 Vela. Okay, so this was my multipliers. And this was my volume at the time when I opened the trade. So moving on. So why do I have both of these? I don't know. Let's keep going. So then the price shot up and I was in profit. So I was making $1 profit. That means $6 in trading profit plus minus $5 in fees. So happy days. But remember, I have to close this trade as well. So it's going to be another $5 in fees. So I'm not there yet. But that isn't going to make sense to me at this price because already nearly at my price. Why is it showing me only $1 in profit? It doesn't make sense. So keep going forward. So the trade, then obviously the price bounced initially, but then went ahead and broke my my price. But here it still hasn't closed my position, as you can see here. But going forward, you can see it's showing my profit here, 351, and then it disappears, and my trade has been closed. As you can see, the price just went up, continued up, never went down. And here you can see that I actually made the loss, a $5 loss, even though it was showing me a $351 profit. But obviously you have to account for $5 of additional fees, right? But still, it doesn't make sense. If I was $3 in profits minus $5 in fees, I should be just $2 in the negative. So where's the other problem coming from? Well, it's coming from the close price. See where the close price? It closed below my limit order. So it was closed at 1.765 instead of 1.77. So again, it's not closing where it's supposed to. So that put me in a loss. Even though I was supposed to make $2, I lost $5. So this is the problem. If you're trying to do scalp and you're just, playing a small range like this, it just doesn't work. You get wiped out. So, I mean, you wiped out. I mean, we can't say wiped out so many small amounts of money, but still, it doesn't make sense. I'm paying $5 for how many tokens? Well, I'm going to show you that in a minute as well, but just, anyway, I don't know why it's doing this. I assume it's because of it can't actually close the entire position at once at that particular price, and it's closing it in and around that price. But centralized exchanges don't do that. Maybe there's a technical reason why decentralized exchanges need to do this. But it's not good. It's not good. And you need to know that, why this is happening. So you see, I paid $10 in fees. and I only made a small amount. Obviously, I made about $5 at the end of the day, where my positions actually opened and closed because they didn't close they were supposed to. So I lost about $7 based on just the way where the positions were actually opened and closed. And I purposely used the limit order because I didn't want to use the market order, because obviously when I'm doing small trades like this, narrow ranges, I can't afford to just let the market maker decide where it's going to open my order. But looks like it does do that anyway to some degree. So there you go. So what was my actual, how much airdrop did I earn doing this trade of 6,000 volume, guys, and losing $5? You can see I had 38 esVELA and 17.4 for Vela. So we're going to show you the numbers. So that's just the current situation. I want to show you what's currently happening. Arbitrum has dumped, and imagine that happened while I was trading. I would have been liquidated immediately. But it's Sunday night, so guys, you gotta know Sunday nights things start to happen. Markets start to open, Japan, etc., and the futures in US or whatever. That's not a topic for today's discussion. And this is where I am currently. I did another trade which went even worse than this one. So, but I'm gonna get 40 esVELA, which I'm gonna invest, and I'm gonna get out 40 actual Vela over 6 months. I don't care. The price right now sucks anyway, so I wouldn't sell it either way. I don't think it's a bad product as such, but it's definitely got its issues. So I'm just going to stick with these. I'm going to sell them when they go 10x, hopefully, at some stage in the future, or at least at 3-4x, just to cover my losses, because I've paid a lot of fees as well that I want to get back. Anyway, sorry, I go off topic quite frequently, but now the important bit, right? So let me show you. I did the numbers, so I ran the numbers, and so this is, I made 2.75 Vela, esVELA, which at the current price of 110 is worth $3.30, but it cost me $5.50 despite having a profitable trade, guys. Okay, so two problems. Profitable trade didn't go the way it's supposed to go. And even all that, I only got 2.75 Vela. That's the best case scenario, which at 120 is worth $3.30. So I would been better. I know it's 133 right now, but at the time it was 120. So that was a trade I did yesterday. So I'm still $2 to the negative. I could just go and buy Vela right now and get more Vela for my money. So it doesn't make any sense unless you can do profitable trading, that is, of course. But doing profitable trading, 600k volume is not an easy thing, and you're likely going to get wrecked and make a huge loss. And that's my problem with this whole entire thing. I get the initial idea, include more people, and then give them an opportunity to trade and make more money. But for most people, we know about 90% of people trade with a loss. It doesn't make sense for most people. So the logic was flawed, even though on the basis it might make some sense. Now, for the good news. If you're paying attention, we are still in an airdrop phase again, and this is the launch airdrop phase. So this phase closes in about 6 days, right? So what you guys can do is, you only need to do $3,000 of volume, and you're going to be included in the airdrop. What is the airdrop going to be? I assume it's going to be roughly the same as this last one was. Might even be bigger because there's going to be less people doing it. So what I would suggest is two opportunities I see here. First of all, when people get tokens, they're going to sell them, the price is going to dump. All right. So could be a chance to pick up some cheap tokens, but it's going to be small compared to the first one. So it might not actually really show up much more than a little blip. I don't think that's a big opportunity. The bigger opportunity right now is everybody's probably run away from this project. So what you guys can do is have 100 wallets, 10 wallets, 20 wallets, I don't know, and just do the basic $3,000 of volume, and you're going to get the airdrop again, right? And I don't think they're going to be checking for Sybils or whatever. And you can do some basic unsophisticated multiple wallet strategy, okay? And you're likely gonna be able to get, again, like 20 Vela per wallet for $3,000 of volume. Maybe red pill, blue pill, I don't know what's gonna happen, but it could be an opportunity. If you can do just a single $3,000 trade that's hopefully not gonna cost you more than a few dollars, you could earn yourself maybe a bunch of esVELA, maybe not as much Vela, but it doesn't matter. You don't want to sell it now anyway. You just stake it for 6 months, get your Vela out. You get that 40 Vela instead of just 20 or even less right now. You're going to make more money. So just make sure you take the esVELA, not the Vela. It doesn't make any sense to claim this amount of money now. Just wait for 6 months. The price is going to be either here or higher in 6 months. All right. So just go with the esVELA. Put it into vesting and get it out that way. Let me show you the system for vesting as well, because if you get eVela or esVELA, I think that's the same thing. If you stake it, you can earn some rewards, okay? But if you vest it, you're going to slowly be released over a period of 6 months, okay? So if you have Vela, you can obviously stake it as well and earn these same rewards as well. or if you mint VLP with USDC, you can earn 50% off fees. So these are other strategies you can take as well. And if you stake it, you can earn an additional 10% of perpetual fees as esVELA, I presume. So as staked Vela, which you then have to vest to get out. So hopefully that covers everything that I want to say. Let me just have a quick look at here. This is the basics. It doesn't make sense just on the very basic current price and volume that you have to do and the time that we have left. And the other thing I want to show you, so in terms of time left, there isn't that much time left. We are currently 6 days left. I think it's August 5th or something. I don't know. So I'm not going to be pursuing this any further. I'm just going to pick up those 40 esVELA and I'm going to vest them to get them out. And I'm going to sell them sometime in the future. And maybe if it goes back to $2-3, that's going to be at least covering some fees. You know, I know we're talking about peanuts here, but it's just the principle annoys me. Why do projects do this? You know, because people can lose a lot of money trying to chase a few peanuts. You see, that's the problem. What they did was terrible. And I don't know, maybe 10 people are going to watch this video, but at least maybe 10 of you are going to save some money with the information that I've just given you. If anything changes, check the description, check the comments. Any questions, put them down in the comments below. Subscribe if you want to get a notification next time I do a video. Drop a like if it was useful, I suppose. That's it, guys. See you next time.